joining us here today for this important meeting. We are going to share highlights from a study that has been conducted to determine how insurers can intervene with appropriate solutions targeted at MSMEs. At FSD, as you're going to hear shortly, MSMEs are quite an important focus group that we continue to work with. I'll take this time to recognize the presence of our partners in this study: Old Mutual, Rest of Africa, UAP Old Mutual Uganda, as well as the Senfree team who led in putting together this study. So without further ado, I'm going to welcome the FSD Uganda Executive Director, Ms. Rashmi Pillai, who is going to give us the welcoming address. Rashmi has over 13 years of experience in global development, and her expertise is focused on how the private sector can be leveraged to drive impact. Rashmi, you're welcome. You can unmute your microphone and your video and give us the welcome note.
Thank you, Diana, and welcome everyone. Thank you, all right. I hope you can hear me. Can you confirm that, Diana?
Yes, we can, Rashmi. Please go ahead.
Perfect. Well, welcome everyone from a warm and sunny Cape Town. I want to quickly thank you for joining us here today. I want to recognize the presence of the insurance regulator, the industry association, which is the Uganda Insurers Association, various financial service providers, certain development actors who are present on the call, our close partners, Old Mutual, Rest of Africa, UAP Old Mutual, and Senfree, of course, who we've worked very closely to deliver the study. As Diana mentions, the study, which focuses on micro, small, and medium enterprise resilience, comes at a very strategically important time for us. FSD Uganda, we've entered into a new strategic phase. Our new strategy is between 2021 and 2026. And here we are focused not just on the supply side of financial services, we're also looking at what is the role of financial services in integrating with people's economic livelihoods, as well as their quality of life and futures. However, the strategy comes on the back of big lessons learned and gains achieved. Since our inception in 2015, we've delivered programs that have impacted over 600,000 Ugandans, 40% of whom are women. Our work on building a more conducive, enabling environment saw us give substantial input into 14 crucial financial sector regulations, policies, and guidance notes. And our technical assistance and grants helped build the fundamental rails of financial infrastructure in the country, like the shared agent banking platform, which we were very critically involved in, and now the national payments retail switch, which will enable interoperable transactions in the country. We hope to extend this influence that we've had in building an inclusive and competitive financial market into our next strategy and support the National Development Plan of Uganda. Our strategy, as I mentioned earlier, can be simplified into 3 categories, which is the role of digital finance for job creation. And there we're looking at sectors like agriculture, trade, and light manufacturing. The second is the role of digital financial services for better quality of life. And here we're looking at digital financial services for health. This is where insurance plays a big role for people and businesses, finance for affordable housing and education. Our third and last bucket is digital financial services or finance for a sustainable future, where we're looking at the impact of climate change on livelihoods, as well as building more equitable societies. This now brings us to the discussion of today, which is micro, small, and medium enterprises, a core target group of our new strategy. We will focus, like many partners and many government agencies, on MSMEs because they comprise of 90% of the private sector and are responsible for 75% of the GDP. Most jobs in Uganda come from MSMEs. But despite the critical role they play in economic growth, stability, diversification, majority of them still remain vulnerable to financial shocks, which limits their growth and sustainability. Building the resilience of MSMEs is key to our economic growth, job creation, and job retention. And building resilience at first requires understanding the shocks that MSMEs face, which brings us to the study today. In 2021, FSD Uganda commissioned the study on the resilience of MSMEs in partnership with CENFRI, which is the Center for Financial Regulation and Inclusion, and with our partners, Old Mutual Rest of Africa and UAP, Old Mutual Uganda. The sectors explored were agriculture, retail, more focused on FMCG, construction, and logistics. The main objective of the study was to consider how insurers can better provide holistic risk management and mitigative solutions to address the broad range of diverse risks faced by MSMEs in Uganda. The lessons that will be shared here today by our partners will shape some of FSDU's own programmatic work and hopefully will result in multiple partnerships with the insurance industry. We are keen to learn how digital solutions can bridge the gap in supply and demand of insurance. More specifically, how it can help in 3 ways. 1, customer segmentation. How can digital financial services help actors in the market effectively segment and profile MSMEs? 2, strong value chain linkage. How can digital financial services enable market actors to create backward linkages to MSMEs and producers in their respective value chains? And 3, intelligent product design. How can digital financial services help financial providers such as yourself collect data to help design relevant products and services that matter to the end client? At FSD Uganda, we will continue to partner with financial sector actors to create an enabling environment that catalyzes innovation and promotes inclusive finance and builds demand-side interventions that will see us work more closely with the financially unserved and underserved, especially women, youth, MSMEs, smallholder farmers, and refugees. Thank you again, and I look forward to a very engaging and fruitful discussion. Over to you, Diana.
Thank you. Thank you for the comments, Rashmi, which really address why the specific focus on MSMEs. Next on the program, we have Jolie Nabahuma Olweni, who is the Country Agency Services Manager at UAP Old Mutual Uganda. Jolie has over 13 years of experience in sales and marketing, which she brings on board to the team. Jolie, welcome. Feel free to unmute your microphone and share your video.
Thank you, Diana. Good afternoon, everyone. Glad to have you here. You're most welcome to this session. And I was already introduced. I'm called Jolie Kabahumolwen. I've been in the insurance industry for over 13 years, particularly in sales and marketing. And I work with UAP Old Mutual Insurance Uganda as a Country Agency Services Manager. UAP is one of the largest insurance companies in the industry in Uganda, and a subsidiary of UAP, a subsidiary of Old Mutual South Africa. We are an integrated financial services company. We offer asset management, life, medical, and general insurance. And we operate in over 33 countries in Africa, with 15 million customers and over 54 employees. We are very glad that we are part of this partnership. And to this note, I would like to recognize the key partners for this research. That's financial sector deepening Uganda and CENFRI Africa, with UAP Old Mutual Uganda and Old Mutual Rest of Africa. we are very privileged to be part of this very critical research because MSME contributes over 75% of the country's GDP and approximately 90% of the private sector. So we are very privileged to contribute to building their resiliency. As we've already mentioned, we embarked on this journey in Feb 2021, and we actually focused on the key sectors in the MSME, which is agriculture, construction, retail, and logistics. And we are very, very positive that this information is going to be very critical in shaping the way we support and help the MSMEs during the COVID era and also post-COVID. Definitely, we don't know what the future has because we are not ready for COVID, and we don't know what else. So it's very important for us to always prepare and build our strategies around how can we be sustainable, how can we be resilient to make sure that we stand a test of time, even when we are faced with any kind of challenge, whether pandemic or any other catastrophe. So you're all most welcome, and I hope this will be a very engaging session for us to learn, and also to, especially for the financial sector, to also pick lessons on what we are going to do best, especially insurance, how we are going to come up with better solutions to protect and partner with the MSME, which is a very critical sector in Uganda. I thank you all, and wishing you all the best throughout the session. Thank you. And over to you, Dana. Thank you.
Thank you very much for those comments, Jolie. So very interesting perspectives from a private sector actor and a development sector actor on the focus on MSMEs. The potential that MSMEs have as a market, but also the role, the critical role that they're going to play forward in bolstering recovery efforts from COVID and supporting national growth plans. So before we move to the next item of the agenda, which is really the crux of today's meeting, the presentation of the findings from the study, where we are going to share with you the approach that the team used to come up with the study, some of the key learnings from the study. I want to really encourage everybody who's on today's call to make use of the chat function. As Rashmi mentioned earlier, we are aiming to make the session as interactive as possible. So any questions, any comments that you might have, please feel free to pop them into the chat box and we'll address them at the appropriate time in our program. So without further ado, I am going to welcome Jeremy Gray. Jeremy is the principal in risk and resilience at Senfree, and he'll walk us through the beginning of today's presentation. Jeremy, you're welcome.
Thank you very much, Diana, and thanks very much for all the introduction. I take a moment definitely to acknowledge the key role of all the partners on this project, FSD Uganda, Old Mutual Rest of Africa, and UAP Old Mutual. It's been a pleasure to work with all of our partners on this project. But I am really excited now to be able to share with everyone here some of the findings from the research that we've conducted over the last 6 or 7 months, and to get everyone's input. So please do feel free, as Diana mentioned, to put any questions or comments that you may have in the chat, and we'll have a time at the end, as you can see, for Q&A as well. So you can go to the next. Yeah, there we go. Thanks, Diana. So as both Jody and Rashmi did indicate, SMEs are a crucial target market, I think really across developing countries, but of course here, specifically in Uganda, and they face a wide range of risks. The attrition rate amongst SMEs is estimated at around 2/3, or like 65, 66%, which is very high. and yet very few of them have insurance. You'll see just now, it's estimated around 2% of Ugandan SMEs currently have any form of insurance. And what we know, even before we started with this study, is that MSMEs don't typically see value in insurance. And it's often with good reason. Insurance products that to some extent are targeted towards SMEs, often not tailored to their specific needs. Where there are SME insurance products, they tend to be quite generic. Whereas if you consider the different activities or range of activities that different enterprises are engaging in, the range of risks that a small enterprise in the tourism sector, for instance, faces is completely different to, say, a small factory in the manufacturing sector. So a lack of tailoring and an understanding and then tailoring of products to the specific needs of SMEs is one factor that I think over time has contributed towards MSMEs not recognizing or seeing value in insurance policies. The other is that claims processes, as we know, are often slow and unreliable, and makes it, really quite challenging and reduces the value to SMEs, particularly as cash flow is so critical for them. So quick claims and quick payouts is really important for SMEs from a cash flow perspective. And of course, you're competing as an insurer if you're trying to sell an insurance policy with all the other demands on their cash flow. And on top of that, I think we found that insurers do have a number of challenges in targeting MSMEs. There isn't necessarily easy entry points always to facilitate or distribute insurance products to MSMEs. And data is often scarce in understanding what those needs and what those risks are. So in this study or this project, we have tried to explore that in more detail and look at an alternative approach to serving MSMEs that may be more feasible from a business model perspective, but also more sustainable and hopefully more valuable to the MSMEs that would receive those policies. And how we've looked at this is that traditionally insurers and other FSPs, not just insurers, I think, have tended to ask themselves what insurance products or what financial products can we sell to MSMEs? And in this project, we've tried to slightly adjust that question to ask first, what do MSMEs need? And then what role can we as insurers play in addressing that need? And that's a fairly subtle change in the question, but it actually represents a fairly fundamental mindset change as it positions us as insurers to think more broadly about what our role is and what our role can be in serving MSMEs, to see ourselves as risk management partners to MSMEs rather than purely as service providers or providers of insurance products. And so to explore this, we started by unpacking 4 key value chains, which were mentioned: logistics, FMCG, retail, agriculture, and construction. And the objective of that is to understand how the functions and how each of those enterprises within each of those sectors function, and where the key aggregation points are. And then we conducted consumer research to actually speak to the MSMEs, to identify what are the consistent risks across enterprise within those individual sectors, on which we can base consistent or comparable product designs that are tailored to the specific needs of subsets of MSMEs. And then we tested potential holistic solutions to try and identify which of these solutions would actually resonate with those enterprises. And that's what we'll be talking through today. So no, you can go back to the previous slide, Diana. Yeah, the next one. So if we take a look at the data, if we come back to let's start and look at what do MSMEs currently look like in Uganda. And as we said a number of times already in the short time that we've been here, they are the backbone. They're of vital importance to the economy. They make up more than 95% of businesses. They employ more than 3.5 million individuals in Uganda. They contribute 40% to GDP. So they're both key drivers of the economy and to societal outcomes within Uganda. But they also constitute a really substantial and strong potential growth market for FSPs, for insurers to grow their business, to grow their own net premiums if they're able to reach into this new target market, which constitutes a substantial portion of potential customers within the Ugandan context. We can see that they are reachable. Many of them have cell phones, but the bulk of these, enterprises do fall into the micro enterprise category, but there's a substantial minority of them that are actually also fairly large. So small or medium-sized enterprises that employ more than 10 people and are really quite substantial enterprises. And yet even those are poorly served by insurance from the research that we've conducted. So if we go to the next slide, as we said, the failure rate amongst MSMEs is high. It's estimated that 2 out of 3 startups in Uganda fail within their first year. And they do face a range of different risks. Some of these are personal in nature. Many of them are related to their business. Many of these risks are not necessarily insurable. Like if the risk or the reason why an MSME fails is because they don't have a competitive offering, that's not really something that's easy to solve for an insurer or even for an FSP. But there are a number of risks that can be addressed, that can be addressed through insurance, but also through effective risk management and risk mitigation tools that can be brought in and to limit the extent of risk with which MSMEs are exposed to. So 65% or 66% of startups in Uganda fail within the first year. Even reducing that to 50% is a substantial increase in the number of MSMEs that survive. And there's considerable evidence and research conducted globally that shows that the longer MSMEs survive for, the more likely they are to be able to grow, to contribute more towards the economy, and to generate more employment over time. So it is really important that we are able, from a sort of an economy-wide societal perspective, it is really important to think about how we can ensure that enterprises are able to survive for a substantial period of time. And from a business case perspective, I think the insurers in the room will certainly be able to tell us that you really need your customers to last for an extended period of time, because the biggest cost is when you have high lapse rates, because of, and one of those things could be because your enterprises are failing or going bankrupt within a short period of time. So going to the next slide, despite the fact that there is this range of risks, just 2% of MSMEs in Uganda have insurance. And there are a number of reasons that contribute towards this. Awareness and understanding is clearly a consideration. However, at least based on the in-depth consumer research that we conducted, so the in-depth interviews that we conducted with MSMEs in this project, what we found is that what underpins these responses, so when they talk about that they don't know how it works, or they don't know the benefits, it's less an indication that they don't have any understanding of insurance or aren't aware of insurance. It's more that from their experience or from what they've heard about contemporaries' experiences, that they don't see how it works for them, or they don't see the benefits for them. And as I spoke about just a moment ago, I think that we can probably all recognize that, in the sense that if we don't have products that are specifically tailored for individual enterprises or for groups of SMEs, and we don't have effective and easy to use claims processes that take a long time to pay out, that have extensive documentation requirements, those products are not going to immediately offer enormous amounts of value or perceived value to MSMEs. So if we go to the next slide, we do know it's also really not that easy for insurers to serve MSMEs for a number of different reasons. And I won't talk through all of these in detail. I think I'm sure that most of these will resonate quite strongly with everyone in the audience. But what we have found is that when we see insurers targeting large enterprises, your large corporates, there's a sufficient business case to effectively tailor the insurance offering to the specific needs of that corporate entity, because the premiums earned from that single client are large enough that they warrant that extra effort or that extra time taken in tailoring a product to their specific needs. At the retail level, like if we think of microinsurance or other retail insurance policies, we can offer a single product to a large number of people. And so although the premiums earned are fairly small, we only need to offer one product to the market to be able to reach scale and therefore business model. SMEs fall in the middle, sometimes called the missing middle, because they don't have that large scale that individuals do, because as mentioned, they're highly heterogeneous. different SMEs operate in conduct very different activities and operate in very different contexts. And so offering a single SME insurance solution is simply not going to work for an entire enterprise market. And so that means that it's tricky to find scale in the way that we can with retail insurance. But at the same time, SMEs aren't large enough to warrant the tailoring of products on an individual basis. So what we need to find is somewhere in the middle, where we can find subsets or small groups of SMEs that have similar sets of needs and face similar risks that we can design products for that reach a sufficiently large group of SMEs that face a similar risk, so that product is tailored for a sufficiently large number of SMEs that there is a business case to serve them. And that is really the basis on which we started this work, to focus on specific value chains. Value chains are not necessarily perfect, but they are a useful existing form of aggregation that we have across all economies, in which you have SMEs or enterprises conducting similar sets of economic activities within the same value chain. On top of that, value chains are also really useful in that they often offer aggregation points. Understanding and breaking down a value chain illustrates to us where there are key points or key institutions which already interact with those subsets of those groups of SMEs. So again, we can use them or partner with them to distribute insurance policies to that group of SMEs, again, making this, again, creating a potential business case to serve them effectively. And then a lack of data and lack of understanding is another key challenge. And again, here, this is where we'll go into a lot more detail through the rest of this presentation. But as Rashmi mentioned, thinking about this more broadly and thinking about the data that we can collect and use to better understand SMEs is critical in overcoming this. And so what we've tried to do, as illustrated on the slide, is to say, first, we need to understand the assessment part. So we need to understand what are the risks faced by SMEs within these individual sectors, within these individual value chains, and identify their needs, as I mentioned, and then consider what are the most appropriate products or solutions to address those needs. And when you frame it like that, the first or initial solutions or most obvious solutions that come to mind may often not be insurance policies. If you, for instance, have a significant risk of fire, the most effective risk management or risk mitigation solution that may arise is an effective fire sensor that gives you that is an early warning system to the merchant and also to neighboring merchants that early warning that a fire has broken out or is about to break out. And so if we think of it like that, we then start to think about how can we bundle traditional insurance policies with more innovative and holistic risk management solutions together. And I think that there's something really powerful here. So as we know, technology and digitalization is increasingly making these types of technological tools more available and cheaper to make it feasible to actually offer these types of solutions. In many developed countries and developing emerging markets, we see telematics as being fairly established and almost normal for even passenger vehicles in those markets. And this is an example of proactive risk management and prevention being combined with traditional insurance policies. And so what we think that this offers MSMEs is that firstly, it more directly addresses their immediate needs that they're very aware of. Secondly, it adds tangibility to the product offering that is being sold to them, rather than just an insurance policy, which always struggles with tangibility because it's a promise to pay out in the event of a potential future event, rather than something tangible that they receive at that moment. But from the insurer's perspective, improved risk prevention and management also reduces the likelihood of claims. So there's also a direct benefit to insurers from adopting this type of approach. And furthermore, the data and information that can be collected through many of these mechanisms helps to further understand the risks that are being faced by customers and to model those risks more effectively and reliably, again, reducing that risk premium that is held by the insurers currently. So that's really the basis on which we started this work in Uganda. And delighted that FC Uganda, of course, and then UA Field Mutual and Old Mutual Rest of Africa were keen to explore this in more detail and understand what are the opportunities to try and apply this methodology within the Ugandan context and to Ugandan MSMEs. So with that, let me hand over to Nicola to talk us through what we actually found in the Ugandan context when speaking to MSMEs and walking through this approach. Nicola?
Thank you, Jeremy. Nicola, please unmute your microphone and share your video, and I'll ask you to introduce yourself before you commence your presentation. Nicola, can you confirm that you can hear us? Jeremy, do you want to move on to the next slides as I communicate with Nicola on the side?
Yes, sure.
Hi, everyone. Sorry, I'm back. I just had some technical issues on this side. As my South African counterparts are surely aware, unfortunately, we have unpredictable load shedding, and I have just been struck by that. So let's hope the connection holds on my side. I will have to apologize, though, that this will mean I'm unable to switch on my camera. But I hope that you can all hear me and that we can remain together for the duration of this presentation. So apologies for that. Just to check, can everybody hear me clearly?
Yes, Nicola, we can. Please go ahead.
Great. Thanks very, very much, Diana. Appreciate it. All right. So thanks very much, Jeremy, for handing over. And I think the important part that we're getting to now in this presentation is actually to share with you the results from implementing this innovative approach to serving MSMEs and to actually rethinking how to build MSMEs resilience with holistic solutions. So what we have on the slide here, and which I think Jeremy has covered to some extent, is the research methodology we followed during the course of this project. So we combined desktop research with qualitative research, focusing on our 4 key value chains, namely agriculture, and within agriculture specifically the coffee and oil seeds value chains, construction, logistics or road freight, and then retail or fast-moving consumer goods. And within each of these focus value chains, we had focus group discussions, in-depth individual interviews with MSMEs themselves, and then a quantitative survey to MSMEs within these sectors, but also more broadly in the Ugandan ecosystem. On the next slide, then, we unpack the 5 key steps that we have identified in order to better serve MSMEs and to effectively meet their needs, essentially. So Jeremy has already given us a high-level view of this, but I think it's important for us to just take a moment and consider this this slide in more detail. The slides that follow will then unpack each of these steps. So as a starting point, as we've already mentioned, the group of entities called MSMEs varies wildly, the different entities within the MSME target group. And as such, it's important to segment them in order to understand them better. And the definition or the means of segmentation that's very frequently used is on number of employees or even potentially size of assets. But we have found that number of employees or assets or turnover actually doesn't serve as a very useful proxy for all of their needs. And in fact, throughout this research project, have applied as a initial segmentation the difference or the categorization of aspirational versus survivalist MSMEs. So aspirational MSMEs, which is the focus of our research, is really those MSMEs that are striving to grow, to expand their business, and that crucially differentiate between the needs of the owner, so the personal needs and challenges faced and risks and finances of the owner, and those aspects of the business. So survivalist MSMEs, on the other hand, are those MSMEs that are more likely to just be serving the needs of the owner or their direct family. So that's the first initial segmentation. I think it's quite important for us to keep that in mind as we move through the results, because while it does not fit neatly into any of the specific categories, but we focused across sizes, across number of employees, but specifically in engaging in the qualitative research, in conducting the desktop research as well, our focus was on these aspirational MSMEs. Beyond that initial categorization, as Jeremy has mentioned, we focused on specific value chains in order to identify actors or businesses engaging in similar activities, so that we could then identify groups of more homogeneous or same type of enterprises that are then likely to face similar risks and challenges, thereby making it easier to serve them with a tailored product. The second step is then to consider which aggregators are viable options through which to reach MSMEs at scale. Now, this really requires an in-depth understanding of the value chains. And what we mean here by aggregators are those actors, those entities, those organizations that bring together larger numbers of MSMEs and that essentially already have a relationship with these MSMEs, through which then it is possible to distribute financial services to them at a less costly and more efficient manner than actually trying to target individual MSMEs. And these two parameters then are what we consider to be key in actually identifying viable MSME segments to target and establishing a business case that is sufficiently viable for insurers to actually continue along this process. The third step in this innovative approach is then to go for this MSME segment that we have identified. How do they currently perceive insurance? What is their current take-up? What is the level of trust that they experience with regards to insurers, but also other financial services providers? And then to understand where essentially the stumbling blocks lie in their effective use of insurance. And then finally, the idea is then to actually go to these segments, to go to the MSMEs within these value chains to conduct qualitative demand-side research in order to understand as best as possible what the risks are and what the challenges are that they face, for which they then need these holistic risk management, risk transfer tools. So that then concludes the final step, which is essentially to go, how can one address these needs? How can these challenges be solved? What is the extent to which the MSMEs are currently coping with the risks and challenges that they face? And what we mean here with holistic solutions, I think you can just go one slide back, sorry. So what we then mean with these holistic solutions, and we'll unpack that in a bit more detail, is really, as Jeremy mentioned, not necessarily insurance first or purely insurance, but actually using technology, partnering with providers to actually identify and implement and roll out the types of solutions that speak to the variety of needs that MSMEs within the key target segments have. I think now you can move on to the next slide, please. Great, thank you. So implementing this approach in Uganda, essentially focusing on these 4 core value chains, shows us that across our focus value chains, essentially within the agricultural sector, it contributes significantly to GDP and to total employment, and that within specific value chains, the needs or the activities at least are quite homogeneous, and therefore the needs and risks and challenges faced are likely to be similar. But of course, this is, these are assumptions that need to be tested during the course of the qualitative research and actually engaging with the target market. So within the construction sector, we see that although there's quite a significant contribution to GDP, total employment or total formal employment and the number of enterprises in this sector is actually quite small. In the logistics sector, road transport and of freight cargo really plays a very important role. And key here is also that even though the logistics sector itself is quite small where the number of MSMEs is concerned, it plays a key role in actually enabling the activities within other sectors. And then finally, the retail sector is quite large again, and contributes quite significantly to formal employment. So from that perspective, we see a business case in serving each of these sectors or each of these value chains with caveats around the number of businesses that are likely to be engaged in similar types of activities. I think you can move on to the next slide then, which focuses on aggregators. One slide back, please. Great, thanks very much, which then focuses on aggregators within the value chains that we unpack. So benefits to identifying aggregators and to actually partnering with aggregators for distribution purposes is that these actors, these organizations or entities generally already have an established relationship with the MSMEs and therefore constitute trusted partners with whom the MSMEs are already comfortable engaging. And as such, we looked into the value chains to try to identify where groups of our target MSMEs were coming together, who they were engaging with, and what the nature of that engagement looked like. So in the agricultural sector, we see agents and traders grouping together or interacting with reasonably small groups, but up to 200 farmers each, with the processes then bringing together even larger groups. And we'll go into an example of the value chain to just give you a flavor of what this process of identification and segmentation looks like on the next slide. But interestingly here, to caveat around the difference between sectors in how easy it is to aggregate groups of MSMEs. So in the construction sector, for example, we identified quite a limitation on using aggregators as distribution points, given that association membership is relatively limited, and that engagement with some of the procurement and disposal entities, or PDEs, at least from our side, proved to be quite challenging at times. So things like local governments and the Uganda National Roads Authority, to engage with them as aggregators, engaging with many MSMEs in the construction sector actually sometimes, proves to be less than smooth. Within the logistics sector and within the retail sector, though, we identify the potential for digital platforms or emerging platform service providers as potential aggregators that we think are likely to have quite a lot of opportunity in the future, even if not so much at present. So during our discussions with FSDU, we also spoke about Safe Border during the COVID-19 pandemic actually having considerably fewer riders on their platform. But the expansion of delivery type platforms that actually link consumers to small businesses, we see that as something happening across markets in East Africa, and even within Uganda, some things like the Safe Border delivery service or HelloFresh in Uganda. We see the potential there to bring together quite large groups and to actually use those as entry points or as distribution partners. I think you can move on to the next slide, please, which then gives us a breakdown or shows you and gives you a flavor of how we go about the segmentation process. So this is the coffee value chain in Uganda, and we created the initial iteration of this figure on the basis of desktop research. But then during the process of the qualitative research, we actually tested it and refined it. And what you can see here at a very high level is the process as well as the value chain actors and how they engage with each other. So in this case, where smallholder or estate farmers is concerned, we see that they interact directly with secondary processes in delivering the coffee berries, but also in some form of secondary processing to some extent, and the export grading process takes place there as well. In engaging then and selling on to village collectors and or cooperatives and or private traders. So in that case, wherever we see a group coming together, engaging in a specific activity, we are able to then identify better and slightly less ideal aggregators according to how many entities they bring together, what activities they engage in, what the relationship is as far as we can gauge it through stakeholder interviews between the different entities. So we conducted this process and we mapped this value chain across each of our focus sectors, which then enabled us to identify these key aggregators, who then, from our perspective, could serve as important partners in overcoming the challenges and the costs associated with distributing solutions to MSMEs. On the next slide then, we go on to the third step, which is really to focus on why MSMEs in our target segments do or do not currently take up insurance. And it's quite clear from the statistics on this slide that the majority don't, with the exception of construction sector, where it's 49% who had not taken any insurance in the past 24 months. In other words, 2 years without any form of insurance. And it's clear from our research that trust is a very big factor for these MSMEs. And interestingly, for our particular target segments, although price is an important consideration, it did not come through as strongly as in other research conducted on MSMEs. And I think part of that is as a result of the target market, which is focusing on the aspirational MSMEs, but also that this distrust and this lack of awareness on the benefits of insurance is really a driving factor here, where the take-up and the low take-up essentially is concerned. So in MSMEs generally learn about insurance from agents. So there's quite a direct interaction there. And despite this face-to-face interaction, the issues that they identify lead to questions around why they would want to take up insurance if actually it does not serve their needs or actually does not meet the needs that they have. On the next slide then, we go on to the research results from the qualitative research conducted on their needs and the key risks identified. And it's quite clear that even within only 4 of the value chains, the challenges and the risks faced are quite different, which, you know, again underpins this need for segmentation, but also for direct engagement and for demand side research, because essentially we see that across the sectors, many of the risks faced are uninsurable, but while they may not be directly addressable via insurance-only solutions, there are technology providers, there are providers of training or other support-based services that could actually meet these needs. And I think that again sort of underpins this need to rethink the role of the insurer as merely a provider of insurance-only policies going, you know, what product can I sell to the MSMEs, but to actually understand what do MSMEs really need from the products that they find valuable and that they want to take up. And it's interesting as well where COVID-19 comes in terms of really exacerbating many of the challenges that were already faced within these sectors. And across the board, challenges and reductions in revenue, delays, causing issues with shipping and port and access to international markets. And really, you know, across the board, although there are unique COVID-19 related challenges, ultimately, we see an increased need for resilience enhancing mechanisms as a result of the pandemic. On the last slide then, to bring together these the previous steps, we identify here an example of a key challenge faced by MSMEs within our target sectors, as well as then in the third column, a possible solution that we proposed to address this challenge. And then in the final column, we present the extent to which MSMEs found this solution to be effective at solving or addressing their challenge. And effectiveness here means that they gave it a score of 4 out of 4. So on the slide here, we see that 70% of farmers faced pest and disease outbreaks. And as a result of these pest and disease outbreaks and the impact that they have on their crops, on yield, on revenues, they found the concept of a pest and disease identification app to be very effective. So 49% of farmers we spoke to found it to be very effective at actually addressing this, this challenge. Now, it's again important to note where we come in with the aspirational versus survivalist MSMEs. As Jeremy mentioned earlier in the slide deck, there is a considerable extent to which MSMEs already have access to smartphones, even if not to the internet, or even some basic or feature phones can run certain apps. So that's just important to note there as well in terms of the target market classification. Within the construction sector then, We see payment challenges whereby firms receive late payment or receive no payment, essentially making it impossible for them to keep operating as a massive challenge, with 44% actually saying that a digital escrow solution would be immensely effective at overcoming this challenge. And what we mean here by a digital escrow solution is where you have a third party that actually acts as the keeper, if you will, of the funds deposited by the client in an account that is then released to the MSME once the service has been rendered. So essentially, it's a way to overcome issues of trust, whereby both parties to the transaction, so the client and the MSME, are assured that the work will be completed and that payment will be received by enabling this third party to essentially act as an intermediary between the client and the MSME. Then within the logistics sector, it was very interesting to note the extent to which governmental procedures and the forms and the delays at borders really affected their business and their efficiency, with 65% of them actually indicating that something like a call center that they can engage with to answer the questions that they have around border procedures and the forms necessary to fill in and the permits required, etc., saying that that would be a very effective solution to this challenge. And then finally, within the retail sector, many are facing issues with inventory and the management of employees. So here, to digitalize inventory systems, even to a small extent by putting in place basic administration software. And then, apologies, there we go. And then finally, then the digitization of employee management systems, where basic clocking in technology, or even just something around making sure that employees have name codes or access to the stores. So in this case, then I see Jeremy's made it quite clear in the chat, and just to reiterate there, that these solutions are then what we see as the tangible benefits or the value added services that serve as almost the hook or the means in which to address or to add benefit and add additional value to insurance policies in this case. So the message of insurance is important and insurance plays an important role, but there needs to be enhanced tangibility or an enhanced illustration of the value by means of these holistic risk solutions is key. Going on to the next slide then, we see iBuild as an example of where this process and where this approach has come together. So iBuild is a Kenyan platform that links customers to customers, or essentially client to client, across the entire construction marketplace with each other. So essentially, homeowners can link to suppliers, can link to contractors and to construction workers in order to essentially engage them and be able to conduct construction or reconstruction work in this case. So what we see from iBuild then is identifying the construction sector in Kenya as a viable market. So GDP contribution and employment is important and significant. But the by the end of 2020, they actually had 30,000 users on their platform, rendering them quite an important and quite a viable aggregator in their own right. So if we go to the next slide then, we see that within the construction sector, there is a lack of uptake where insurance is concerned, but then considerable risks faced, especially around fatalities and where injuries are concerned. So we conducted research with iBuild's own users to understand more about the risks that they face and the challenges that they face. And to see that actually within the Kenyan construction sector, fatalities are relatively high in comparison, for example, to South Africa or China or the United Kingdom. And within the sample as well, having 46% injured on the job and 31% who could not work for 3 consecutive days or more as a result of injuries. We see then that ultimately, iBuild itself plays the role of aggregator, but then also the role of value-added service provider, because among the services that iBuild actually offers to users of its platform is, on the one hand, it enables digital payments by different actors that use the platform, as well as escrow services, which we actually identified, as I just mentioned, as a viable solution to overcome issues of trust and to address issues of payments. So in this case, really, it speaks quite well to the various needs of construction MSMEs. So as a result of its potential as aggregator, and as a result of the value-added solutions that it itself offers, in 2020, Britam Insurance partnered with iBuild and was able to then develop an accidental medical microinsurance covers for workers on the platform. And here it's important to note as well the significance of price in enabling MSMEs within this particular market to take up and use the product. You can take us to the next slide, please. So where this leaves us, and what I hope that the participants of today's workshop will take away, is essentially that meeting the needs of MSMEs in the Ugandan context, but across the board, requires a concerted effort. And we've seen what happens where MSME insurance is concerned when the business as usual approach is followed, in the sense that there is a serious lack of trust and resulting in quite a serious or quite low uptake among MSME insurance. So for insurers themselves, we believe that focusing on expanding their reach beyond who they currently serve, by understanding the target markets better, implementing this approach, segmenting them to understand their needs and the risks that they face is a key imperative. And a shift away from insurance-only policies to actually focusing on insurance plus value addition, insurance plus holistic solutions, we think are key steps to take to overcome these issues. Where the regulator is concerned, we see a role in supporting innovation, in supporting the dialogue between insurers and technology partners who are the providers of these types of holistic solutions, or the value-added solutions rather. And for technology partners themselves, seizing this opportunity and engaging insurers to actually partner with them and to act as distribution platforms, but also to enhance the business case and enhance their own value add is key here. And then finally, for development partners, of which FSDU is a crucial component in the Ugandan market, we see a role for coordination to drive and push through a common innovation agenda, and then finally also for additional research on these market segments to understand the needs of the underserved ones. Thank you very much. Thanks for your attention. I see there have been some comments in the chat. I'd like to hand over back to Diana now for the question and answer session. Thank you.
Great, thank you for the in-depth presentations, Jeremy and Nicola. It was very insightful hearing your approach to the study and the recommendations that have come from it. Now, one of the core reasons why we're here today is to hear directly from insurers and other financial service providers about their experiences. So it would be great, before we move into the question and answer session, to hear from a few of our guests here today who work within the subsector, to let us know what some of the challenges they have faced while trying to serve the MSME market. We are also quite keen to hear what it would take for you as an insurer, as a financial service provider, to be able to serve the MSME market. So I will request, if you have a comment or reaction to this, kindly unmute your microphone, and we welcome you to put your video on. You will need to state your name, your organization, the organization or institution that you're representing, your title, before you move on to your reflections. I see Hamza Mutebi, you shared some reflections in the chat box. Do you want to unmute and share some of these learnings that you have with the rest of the guests on here today?
Thanks, Dana. Thanks a lot for this engagement. I think it was a very insightful discussion into how best we can crack this unserved market. My name is Hamza Mtebi. I work as a country manager for Turaco in Uganda. Just to expound on what I highlighted in the chat box, I ran a pilot with one of the key aggregators in this market. I'm largely engaged in aggregating on behalf of EABL, so barley, sorghum, and all that in the southwestern region. One key thing I picked up is, even when you think you've cracked the aggregator section of that segment, there are several other smaller layers. There are smaller traders that these guys work with that help in the process of aggregation. There are transporters that are involved in the process of aggregating this raw material before it ultimately gets to one focal or central point, where this key aggregator on behalf of EABL would then pick up the raw material. Without going into specifics, that's the one key area that I would like you guys to also concentrate on. Interestingly, I picked up the same thing trying to work with a similar aggregator in the coffee, a very large aggregator in the coffee sector. There are so many other coffee traders that are involved. Then the other interesting area where I picked up a really big challenge is in the sugar, the sugar sector, You have some really large factories that work with many other, what do they call them? Outgrowers. But these outgrowers, you will find that some of them do not actually bring their own raw material to the factory. They sell to a certain small trader, for maybe cash up front, and then the trader will deliver to the factory where payment is probably T plus 30 days, something of the sort. So in the process of disseminating our products to these would-be customers, you find that you are actually engaging with and talking to another middleman, quote unquote. The ultimate farmer has stayed somewhere in the field and you have no visibility whatsoever who they are. So I want us to be cognizant of some of these challenges as we debate how best we can work with these farmers. Thank you.
Thank you very much, Mr. Mutebi. And perhaps I will give the Senfree team an opportunity to react to those very useful and insightful experiences that we've had about just now. I also welcome my colleague, David Dakwa, who's our Manager of Competitive Strategies at FSD Uganda, to chip in on his reflections with the submissions that have just been made. So Jeremy and Nicola, I welcome your comments.
Yeah, sure. I think, Hamza, thanks so much for sharing that. I think it's really interesting, and it's great to get those experiences of people who've actually tasted some of these. And I think your experiences are, of course, 100% valid. And I think it is definitely one of the challenges particularly in the agricultural sector, is those different layers of aggregation that we do see. And I think, I don't have an immediate solution to that. I think that, obviously the initial objective is to identify aggregators that at least reach a sufficiently large number of farmers that it constitutes a viable business case to distribute these types of products. And yeah, I think the other really interesting model that I think we're going to see developing over the next few years, and there's a question for me in terms of what role FSPs can play in supporting the development of it, is sort of increased platformization of the economy, particularly driven by increased digitization. And I think I did some work earlier this year looking at the Chinese market, for example, and how which is obviously a different context to Uganda, but I think that the process with which Alibaba has gone about incorporating and integrating all different players within the value chain into central platforms. So there's a platform for logistics providers in which that coordinates the activities of logistics providers. And I think we see a number of similar solutions beginning to develop across Africa as well. We actually didn't find any in Uganda that are yet operational, but we have certainly seen a number in Kenya, in Tanzania, in Senegal, in Nigeria, in South Africa, where you have platforms that aggregate those logistics service providers and then link them to the farmers. And I think that process, as with the growth of e-commerce that we've all seen really driven further by the pandemic, is I think a trend that is, at least in my mind, almost certain to continue over the medium term, because there is significant inefficiencies in how produce goes from source to consumer, and it's not going to happen overnight, and it's not going to reach all parts of the country or all parts of the economy, even in the medium term, most likely. But I think those type of models that are emerging are really interesting. And I think that there's a question here around what is the role that, as I say, that insurers or financial service providers can play in supporting those. So very briefly, like take logistics model or logistics platform model, which I know is not exactly responding to your agricultural point, but there's a strong case in building up a logistics platform that in order to get scale from a platform perspective, in order to grow the reach of your platform, you need to be able to offer finance to participants on your platform. Because one of the biggest challenges that logistics providers in the country face is that they are challenged by having small and inefficient trucks with which to transport produce, because they're unable to access large amounts of capital, which is required to buy new efficient trucks. So they therefore have higher running costs as well as higher carbon emissions. And so finance is a key driver of being able to scale up that network. And I think we've seen that, for example, like with in more closer to home, like the border models, like Safe Border, where they've been able to offer financing to some of their drivers to access key infrastructure like smartphones, which is integral to their model. And then I think on top of that, you've got the opportunities then to, if you're offering credit, you need opportunities to you need to figure out how to de-risk that credit, because they constitute quite a risky target market. So that integration of credit and insurance offers really interesting opportunities in terms of unlocking and enabling these new emerging business models that we are increasingly seeing across all these different sectors of the economy. And yeah, agriculture maybe is sort of not the first one that's going to be adopted, but I think increasingly, and particularly for those value chains that are key products and like the key export value chains, is where I think we're going to see these types of initiatives take place first. That may have been a bit of a tangent, but I hope it partially addresses the question.
Thank you. Thank you for your reflections, Jeremy. I think, Wangeshi, thank you for the questions that has come in. Richard, I'll get back to you just now. I think it would be good for us to give an opportunity to the study partners, FSD Uganda, UAP Old Mutual Uganda, and Old Mutual Rest of Africa, an opportunity to react to that submission as well. So David, if I still have you on, followed by Jolie and Mohau, kindly feel free in that order to unmute your microphones and share your videos if you have anything else to add. Okay, Jolie, are you online?
Yes, Dana. Yes, I'm online. I wanted to request Mohau to comment on it.
Thank you, Jolie.
Thank you.
Okay, Mohau, any additional reflections or reactions to the comments and submissions just made?
Yeah, thank you so much for that, Diana. And this research has been quite monumental for us as Old Mutual. We're doing research in Uganda, but the learnings, we're taking them into other countries. What I like about what Hamza has mentioned is practical engagement on the ground and the challenges that are there. These are part of the questions that we wanted this research to help us take us to answering part of those. The additional commentary that Hamza brings in is also some of the areas that we are grappling with other potential partners to help answer. How do we practically make from start to end the process frictionless for a farmer, for the retailer MSME, for the logistics operator, for that construction MSME? So it would be really of interest to gain more insights from different colleagues who are on this call and colleagues who are in the industry as well. Our intent is to make sure that as soon as an MSME needs support from an insurance perspective, that insurance is not something that is a hard sell. So this insights that have been shared really talk to how we would like to make sure that insurance is embedded within that ecosystem that MSME is operating. So we're really looking forward to what is going to take place going forward following this research. allow me to stop there. I'm very interested as well to hear other colleagues.
Thank you, Mohau. Thank you for your additional comments. And I know the questions were really targeted at insurers and FSPs, but certainly if you are a development sector actor, we know we have a few of you on the call with us here today. Kindly feel free to flag that you want to share our reflection in the chat box. So very quickly, running through the questions that have come in, and in the interest of time, I will just read them out to ensure everybody has had them. And then I'll give the technical team, Jeremy, Nicola, as well as my colleague, David Dako, an opportunity to react to some of them. So the first one came from Wangeshi Madenge, who asked what the take-up was like for the insurance product that was discussed in the presentation, Nicola. She says that there always seems to be a disconnect between the risks that MSMEs experience and how they purchase product. She likes the use of other solutions to be used as a hook, but how do you get to good take-up? Richard Mwebeza shared that the key challenge really is in product modeling, and his is more of a comment than a question. A project that the subsector needs are niche specific and tailor-made to suit their needs. One of the challenges that he identified that's inhibiting a progress towards this is the availability of research funding that has been an issue before design is done. Secondly, he shares that systems that enable underwriting, claims payments, and premium collection conveniently are needed. However, largely, the primary challenge is to hack the customer requirements and exercise flexibility. And when he's talking about customers, we're talking about the MSMEs here, and exercise flexibility in designing hybrid value products. The last comment from Wangeshi, before I give the team an opportunity to come in and comment and talk, is also for these aggregator partnerships that we profiled, how can players encourage the aggregators to take ownership of these products? And what she specifically meant was ownership of the projects, talking and engaging with MSMEs, responding to their queries, and dedicating resources to drive the uptake of insurance. So maybe Jeremy, Nicola, you want to respond to those comments those questions in that order.
Sure, thanks, Diana, and thanks for the questions. I think these are really, really good. So I think I'll sort of answer the first two together. I think firstly, this process, in fact, as Richard is talking about, was in fact primarily that first phase of doing the consumer research. So the next phase will be then to pilot the product and to assess, to see how it resonates with the MSME target market. The process we took with the consumer research, as Nicola articulated, was to try and actually test tangible products, to suggest, to explain what the product would look like, and then ask the MSMEs, would this be something that A, solves your challenges, but also would you be willing to buy it? So what we shared was that is fairly positive, but of course there is sometimes an action gap, an intention action gap in how people actually make those decisions. So the process of piloting and testing that will be key. And yeah, I think that the UOP Old Mutual team certainly has intentions to take that forward. But hopefully this will inspire a number of other players in the market to also consider some of these opportunities and to explore these opportunities. And I think, I do agree that research is critical, and research funding is often a challenge, which is why it's, what is great about this project is that if Uganda has stepped in as an enabler of the market to help provide much of that funding for the research in this instance, for the purposes of public use as well. So following this in the next little while, hopefully the next few weeks, we are also together with this presentation, we'll be publishing a document that shares in a bit more detail the findings from the study as well, which will obviously be published, but we'll be sure to share with everyone as well. So hopefully this will help to at least give some ideas of where to look at in terms of opportunities. And the last question from Wangesi about the aggregate partnerships. I think that's a really great question, because that's really key here, which is around, in order for these partnerships to work, I think it's critical to design products or solutions that speak directly to the aggregators' problems or challenges, as well as to the end consumers. So they need, in order to make sure they're incentivized to sell that product, to engage with customers with regards to that project, they need that incentive needs to be built on the fact that what you're offering them also contributes towards their core objectives. And I think what we've seen in the past, for example, with MNOs, where they have offered insurance policies, it's been seen as a peripheral small revenue stream that's very much not their core business, or as a loyalty product that is really not their core business and not even a revenue generator. On the other hand, where we've seen models that work is like where insurance has been demonstrated to improve the repayment of credit, for instance, or where we've seen that the insurance or holistic solutions, for example, ensure or improve the reliability of producers to provide to provide their produce to processors, for example. So, for example, agricultural scheme. So, if you've got more farmers that are more resilient and able to more consistently provide produce more consistently, and you can demonstrate that, then again, I think that provides clear value to the aggregator that you're trying to serve. What is key here as well, though, is I think as an insurer is to go in this from the beginning with your eyes wide open around demonstrating the value to the aggregator and making sure that you capture and collect effective data to illustrate the value that the product is providing to them. Because it needs to not just be that there is value to them, they need to also be able to see that there's value to them. And I actually would pass on here, Diana, to David, because I think, David, you've worked on this quite a bit, and I don't know if you have a couple of points to add to that.
Thank you, Jeremy. David, kindly feel free to unmute your microphone and share your video to add on to what Jeremy has just shared.
Sure. Kindly confirm if you can hear me.
Yes, we can, David. Please go ahead.
Right. Okay. Thanks, Diana. Thank you, Jeremy. So not to belabor your point on regarding Wanjeki's question on aggregators, clearly co-creating solutions with the intermediaries, these key value chain actors and aggregators is crucial, particularly when I say co-creation, I'm talking about the business model, and that we need to make sure that we incentivize the aggregators sufficiently. But then over and above that, I think it's also very, very important to underscore the fact that the insurers need to ride on the relationships between the aggregators and the end users or the MSMEs. The truth of the matter is that, and I'm happy that this study has also confirmed, is that generally the perception of insurance amongst this demographic is not very positive, is not very encouraging. And so basically, if there's an existing relationship with an aggregator and you have insurers trying to sell products directly to the end users, it may not really fly. And that may speak to the uptake question that Wanjechi highlighted earlier on. And if we want to really gain uptake, we need to see how we can ride on the relationships that exist, right, between these aggregators and the end users. And oftentimes that requires that you may need to have a handoff between agents and, your own agent, the agents of the aggregators and the insurers, to make sure that there's sufficient training that be able to understand the product and not missell it. And that usually is expensive because it's to sell, it's easy to just get someone to teach someone to sell something, but to make a convincing sale, actually make sure that you get some of these agents who may not have known anything about insurance to be able to sell appropriately and not mess up any of the details is sort of a Herculean undertaking. And so that's an important one that I think insurers need to be cognizant of, that there usually is a lot of investment in sort of building the capacity of the aggregator themselves. And additionally, to the point that Mark raised earlier about the needs of aggregators, I think it's important as well when we are saying that we should see how we can support or maybe help aggregators to help MSMEs to basically improve their record keeping by digitizing data. This is a solution that can also work for some of the aggregators themselves, some of these different market actors along the value chain. So let's not just look entirely at the MSMEs. And if we want to strengthen the entire offering to make sure that it's as holistic as possible, we need to also look at the actors along the value chain and their needs as well. So this is a truly comprehensive solution that we're advocating for here. Thank you.
Thank you. Thank you, David. I think we are now 3 minutes past the top of the hour and would need to bring the agenda to the close, but we certainly thank all our guests for the vibrant discussions we've had on the call and in the chat box. This does not end our engagement with you. As Jeremy mentioned, we will be producing and disseminating a detailed report with detailed findings from the study that we will give each of you access to using the email that you registered for this webinar with. If you have any additional thoughts, comments, please feel free to share them with our team at info@fsduganda.or.ug. And certainly we will also make a copy of today's proceeding available for you, should any of your colleagues and peers be interested in recapping and learning about what we discussed today. So once again, I want to thank our partners, Old Mutual Rest of Africa, UAP, Old Mutual Uganda, the Senfree team for putting this together, and everybody for your participation in today's call. Thank you and have a lovely